Hello, everybody, and welcome to another episode of Ask Jameen. I'm Nicci Willis, and
I'm Jameen.
And today is all about student loan debt. Yep, many of us have it. We're going to talk about how student loan debt can change the real estate market. All right, here we go. So before we get started, we want to send our prayers and our thoughts to those who are over in Ukraine. They've been under siege and in war for several days now. So our prayers and thoughts go out to you all. Also, before we get started, I want to remind you to subscribe. We are trying to grow our subscribers. Once we get to 1,000, we're going to do something really special. But if you haven't subscribed already, make sure you do that. Just click that button down there in the corner and click the bell so that you are notified every time we upload new content. Okay, let's talk student loan debt.
Let's do it.
All right. So we know that, the Biden administration had talked about doing some things with student loan debt. I've seen a lot of people, my friends included, strangers, all the things, people talking about, their student loan debt. I have student loan debt. So it's going to be an interesting topic to talk about, especially in how it relates to the real estate market.
Yeah, that was a trending topic for about 3 days. Cancel student loan debt.
Yeah, that's been a trending topic for a couple years for me. But let's get into it. So we've got some facts here. And so I'm going to talk about those facts, and then we're going to get into a little discussion, a little dialogue. And if you have any questions or, anything that you want to bring up, make sure you comment below. We love reading your comments and talking about those. And we love engaging with you. So make sure you comment below. Okay, so the first fact is 42.9 million Americans, I'm one of them, has federal student loan debt, according to the most recent data from the U.S. Department of Education. So this means 1 in 8 people in the United States carry student loan debt.
What's the percentage?
That's 12.9%.
12.9%.
Yeah.
So I think that when people hear the big number like million, or they hear percentages and you don't break it down, sometimes you can hear things on the news or hear statistics and you don't equate it to your everyday life or the people in your circle, people that you know. So those numbers are kind of murky because you have to kind of break them down. So we're talking about the real estate market and how student loans affect the real estate market. So it's easy to say, okay, this is how many people have student loans, but it translates a little bit different when it comes to real estate.
Okay.
So my number is the home ownership rate is 65% in America. So 65% of Americans are homeowners.
Okay.
The problem is you have a huge population of what we would call baby boomers. So people who are aging that are homeowners, and those people didn't have to get in student loan debt to become a homeowner. True. So you have the large percentage of homeowners that already own a home, they don't have student loans. So the majority of the people who have student loan debt aren't homeowners. Which presents the problem. Yeah, so you have like the industrial age. So like your dad and my grandfather. My grandfather grew up in the South, migrated to the Midwest, and he worked his way up in the factory to become a manager in the factory. He didn't have a college education, but it allowed him to provide for his family, to become a homeowner, and things like that. Just like your dad. Your dad worked at Cincinnati Bell and had a nice job like that. So that age didn't have to get into a whole bunch of student loan debt to become a homeowner and things like that.
Well, I think as far as my dad, I know my grandfather didn't. Like he built a house back in like the 50s and 60s, I believe. It was like late 50s, like early 60s, something like that. But he built a home, and like, you know, had no student loan debt, obviously, because he was a janitor and had a janitorial business. My dad didn't go to college, but my mom did. Mm-hmm. And so she had student loan debt, and she got into debt. So I think like right in that transition, that's when you really started to see more, especially now though, I think with Gen Xers.
Oh yeah, absolutely. And we'll get into it more, but it's kind of like, it's like harder and harder to become a homeowner, because before, so you take my grandfather's age group, they didn't have to get into student loan debt to go to college to become a homeowner, and then it moved down the line. So now we're like, not only do you get in student loan debt, but when you get out of college or get that degree, it doesn't compensate financially. Like, oh,
to purchase a home.
Because I did this, now I make all this money. It's like, I still have to figure something else out, but we'll get back to that in just a second. So when it translates to real estate, a lot of the people that are, yes, 65% of people in America are homeowners, but a large percentage of those people don't have student loan debt. Okay. So a large percentage of the Americans who aren't homeowners have student loan debt, which is why we're talking about what we're talking about today.
Okay, so with that being said, here's another fact. 11.1% of student loans were 90 days or more delinquent and were in default before the coronavirus pandemic. And defaults were halted as a part of the crisis relief. But before that, at least 11% of student loans were at least 90 days or more delinquent. So
that's something that we don't really think about. The pandemic actually saved a lot of things. You had the eviction moratorium. You had student loan moratorium. So it's because this was going on, they put these negative things by the wayside. So to put this in perspective, if you have, let's say in property management, if you're 90% occupied, that's like, oh, it's a problem. They start bringing corporate people in. Why are you 90% occupied? Or if you see 10% of mortgages being defaulted, that's like when the real estate market started to crash. So when you think about 11% of people were delinquent, that's alarming. Like, hey, what's going on? Let's bring an analyst in. Let's bring a specialist in and try to determine what, the problem is. So before the pandemic happened, it was really alarming on the percentages of defaults. And that lets you know how, not just the real estate market, inflation. That's why people are 11% behind it, because when people graduate from college, it's not like they're getting the equivalent in this job that pays a salary. It's like, because I went to school, I had to pay for it. But it's okay because I make X. Those days are kind of gone. And so in your mom age group and like my uncle's age group, that may have been true, but now it's like people coming out of college getting entry level job, or
not even what they majored in. That was a big problem when we graduated. Yeah, you got whatever degree it was, but then you had to actually get a job, and there was no job that fit what you had majored in. So in addition to just the overall negative effect of people being delinquent on student loans because of inflation, if a person is delinquent on student loans, that's one of the deal killers of buying the house. That's one of the major questions when we counsel people, when we meet with them first time. It's like on this checklist, are you delinquent on any student loans? And so that's one of the major things that can prevent people from purchasing a house. And so that's why we have to come up with solutions, and we have to lobby, and we need to get at Biden or something to say, hey, you really do need to cancel these student loans, because delinquent mortgages is one of the major things that can prevent somebody from purchasing a home. So true. Okay, so here's another fact. 55% of bachelor's degree recipients from 4-year public or private nonprofit colleges had student loan debt.
Yeah.
So this was in 2020. So 55% of bachelor's degree recipients, either from a 4-year public or a private nonprofit college, when they graduated in 2020, they had student loan debt.
Exactly. So like we said before, when these people graduate from college, they aren't getting jobs to say, okay, I had to pay student loan debt, but it's okay because I'm making $300,000 a year. You have to combine a degree with experience, and you got to know somebody to get to that level. The days of I went to college and got a 4-year degree, or things like that. It's like, okay, I'm okay now, because of inflation and our job market and competition and things like that. Those days are pretty much over.
I mean, we've talked about our kids, and we have a daughter that's graduating high school this year, and she will be going to a 4-year university. And, we were pushing her about scholarships and all that stuff because, there are scholarships, and then there are grants, then there are the loans. And we don't want to take out all those loans, because loans you got to pay back. And there's the subsidized, and then there's the unsubsidized. And I don't want her to graduate with all this student loan debt. It's just, that was like one of the biggest things that I started talking to her about as a freshman in high school. I don't want you to graduate college with all this debt, because, the jury's still out for me as far as college being, the right choice, for most people. And that is because, I've got a master's degree, and I'll probably say more times than not, my degree wasn't used to the capacity that I originally got it in. I mean, I've got a marketing degree, which I guess now I'm using it more now. But I also have an MBA. And, when I graduated, I got into a fairly nice job. I was in corporate America, but it wasn't in marketing. It was not in marketing. So, so we'll keep y'all posted on how she's doing, but but this is hitting home very much so. And now you're also seeing, and this is not in our notes, but now you're seeing generations, at least two generations now that have student loan debt.
Right.
So you've got the parents still paying off their student loan debt, and now they've got kids coming on, and now they're accumulating debt. So it's really becoming a problem.
Yeah.
And I'm sure we're going to talk about it, but you're talking also about like how much you owe. We haven't even talked about how much you owe and how that affects it. But
yeah, absolutely.
We'll keep going, and yes, we'll keep you posted on the progress. But
and to be frank, another thing is, just to get down to the nitty gritty of it, a lot of the people who have to get student loans, a large percentage is minorities. So when we talk about like the last series that we had for Black History Month, we talked about African Americans and trailblazers and things like that.
Yeah.
A large percentage of the people who have to get student loans right now that are affected by this situation is minority. So it's really, when you talk about the wealth gap that we talked about before, this is one of the things that contribute to it. So it's really something that we need to look at and come up with some solutions, and really kind of wrap our head around and see what we can do, because as we're talking about this, it can be a major thing. Like depending on one or two things, it can have major implications on the good side and also on the bad side. Yeah.
Oh, another story time. I was just talking to my mom yesterday, and she told me that she and my dad took out a second mortgage on their house to pay for my brother and our college, because I have a twin. Okay, so and we went to separate colleges. We did what we could for scholarships and things like that. But neither one of us had full rides. I mean, we were decent, but we didn't have full rides. So they had to take out a second mortgage on their home in order to put us through school. So, and then she also told me, because my mom has a doctorate degree, she wasn't finished with her student loan debt either. And she just paid off her student loan debt a few years ago.
Yeah.
But so she had student loan debt when I had student loan debt. And now I'm like paying off my student loan debt, and my daughter now has student loan debt. So it really is becoming a huge problem. You've got these large amounts that are being carried on now through generations.
Yeah. And it's starting to make you really think, like, we have a resurgence of entrepreneurs and business owners and things like that, which we are heavily involved in. But it makes you start to really think, like, what do I really want to do? Because, you know, somebody can go to a trade school and become a plumber and can be sitting pretty. And when you compare it to somebody who goes to a 4-year college, that plumber who went to get his license or certificate or training or things like that, or even if you had to be an apprentice, can come with his plumbing license and make good money starting out without student loan debt. Right. So you have to really think about, like, what do you really want to do and take advantage of scholarships. And, you know, I know it's like, you know, cliche of the sports thing, but sports can get scholarships, and scholarships equals no student loans.
Yeah. Or going to a community college.
Yeah, community college.
That, you know, you get the same type of education, but not all the payments. I mean, that was definitely something that we thought about and we talked about with our daughter. Just being transparent, you know. And then we just talked it out and discussed that was not the route that we were going to take for her. But it was definitely something to consider, and especially when you're thinking about your future. And at this point, now generations, do you want to carry that debt?
Yeah. And let's get into the next factor because it rolls right in.
Does it roll right in? Here we go. Okay. Right, so 90% of undergraduate and 63% of graduate private loans were co-signed by someone else during 2020-2021 academic year.
So that's exactly what you just said. So that's the facts right there that match up with a real life situation. And that affects the person who co-signs from being able to purchase, you know, a home too. So the best thing that you can do, I know we're not talking about a whole bunch of solutions right now, but the best thing you can do is to take a student loan and put it into an interest bearing thing, like maybe not a second mortgage, but if you have a rental property where you have equity or something like that, and you can pay the student loan off, even if you put it a second home, in theory, a student loan is not going to appreciate in value. In theory, your home is. So what your mom did, I mean, it may, depending on if the real estate market, you know, tanks or things like that, but in theory, that was smart because a student loan is never going to appreciate in value versus a home. If you put that in a home, it'll appreciate in value and it could, you know, offset it. So that's the being creative part of it. But it not only affects the people going to college, but it affects the parents or guardian that have to co-sign and that are making sure that our children have a proper education. So. Right.
I mean, we're looking at three generations on my side of the family. So, but I think, you know, just considering other alternatives to fund your college education or different type of college education could also help. So
yeah, absolutely.
Okay, here's another fact. Here's another fact. All right, the average monthly student loan payment was $300 before the White House instituted the repayment moratorium, which was the suspension that is now in place through May 1st, 2022. That's interesting.
So that's coming up.
Yeah, it is.
If you have a student loan and you have to pay $300 a month, or you go from being in deferral status to now have to pay it after May, and let's say they're saying the average is $300 a month. Okay. $300 a month is equivalent to $50,000 worth of buying power when it comes to mortgages. And that's huge in this market because if you look at the average price of a home, if you're only pre-approved here in Las Vegas for 300, the difference between 300 and 350,
that's a big difference.
It's a big difference. So every 50,000 is kind of the check down. So if you say, if I'm pre-approved for 250, that's a condo, you know. Or if you can get up to 300, okay, maybe now that's a townhome.
Could be a townhome.
Or if you do another 50, that could be a house.
Yeah.
So that's a lot of buying power, and that can make a difference. Let's say to even get a condo for 250, let's say you're only pre-approved for 200 now,
right?
Because you have to start paying your student loans. There goes your ability to buy a home right now in the current market. So you have
buy more of what you want.
Oh yeah, absolutely. Yeah, so it takes some people out of the market of buying, period.
Yeah, and
then also it takes people they have to buy less, you know, or a smaller home or a less desirable area than they, you know, necessarily want. And we have people that we're working with right now that this, you know, affects. It's a couple people that we have that can't buy right now, and student loans is the main factor of it. So it's a huge thing. So if you take that, if that's extended, that's going to have major implications, because if this majority of people or this amount of people after May have to start paying that back or have to start paying, period, it's going to take a percentage of people out of the home buying market.
Very true. Very true. Now, one of the good things, I'll say on the bright side, I'm trying to remember when the date was, but I want to say it was late summer, early fall, when the federal guidelines for student loan debt changed. And I believe I put out a small video about it, and so you can go back through my social media and check it out. But what happened was, how they originally looked at student loan debt was they would take what you owe and they would take 1% of that, and that would equate to your monthly payment. So for instance, if you owe $50,000, they would take 1% of that, which is $500, and that's what they would equate as your monthly payment. And so what they ended up doing was they took that and sliced it in half and said, well, now we are only going to consider 0.5%.
Right.
So again, $50,000, taking 0.5% of that would actually mean that your monthly payment would be $250. And that did make a difference for many people.
Absolutely.
It did help. And if you have talked with or are talking to a loan officer or a mortgage broker, go ahead and ask them about that. I definitely would do that. Today it's March 1st, 2022. I always want to put the date in there because I don't know when you will be watching this and things do change. But as of today, that
put update at the bottom.
Yeah, I'm gonna put slide an update in there if it changes. But as of today, that's still happening, and that has helped many people still stay in the game if they want to purchase a home.
Yeah, and so when you talk about student loans, it does have the ability to affect the real estate market, especially if we have rates continue to go up, and then you combine that with a percentage of people that now have to start paying on their student loans. That has the ability to not tank the real estate market, but level it off from being extremely a seller's market to at least a balanced market. And then we have things that's going on with Russia and Ukraine. We're unsure of how that's going to have an effect on things right now.
Right.
On a good note, should our current president get rid of student loans, it would have a major positive note on first-time home buyers, people who have student loans, because it'll take that amount off of people's debt to income ratio.
That's huge.
So they can buy a higher price house, or sometimes it puts them in the price range of not being able to buy a house to being able to buy a house. So that'll be huge, to where a lot of people that rent can now at least have the option, do I want to rent or do I want to buy? I have the option. A lot of people don't have the option. They just need to rent or can rent right now.
Right.
So that would be huge. So
that would be big.
Yeah, that would be big. So it really can. Student loans can affect the real estate market because since I've been a realtor, I've seen student loans affect the real estate market 3 times. Because if it was in a deferral status, it wasn't on your debt to income ratios.
Okay.
Then when they're
when was that back?
So from when I first got into real estate in '99,
okay,
up until the housing crash, if your student loans were in deferral status, they didn't put it in your debt to income ratio.
Interesting.
So then when we had the housing crash happen, they changed that law and they started doing the 1% thing. Then they saw, oh, this is really affecting the real estate market. Yeah. This is really affecting people graduating from, college and people, first-time homebuyers from buying a house. And then they adjusted it to the 0.5% thing. So I've seen 3 changes in my 25 years that's really affected the real estate market. And if you add something else, like rates going up to it, it can at least level. You definitely will see the change in the real estate market. Sometimes things happen in the economy that don't really sway the real estate market one way or another. But this is one of those things where you can actually, you definitely see it, especially if they're canceled.
Indeed. Well, guys, all right. So let's kind of put a nice pretty bow on it, and let's go over, because I feel like this one was a little bit more doomy and gloomy, but
and we can talk about solutions.
Yeah, let's talk just for a couple minutes about solutions, or just reiterate some of the solutions, because I know you guys come to us just for some tips and advice, and we've laid these facts out for you, but let's talk about some solutions.
Well, the first thing is, it's a short-term solution, but it doesn't create, and this actually creates a bigger problem.
Okay.
A lot of people, and some of these people, a lot of people go back to school just so they don't have to start repaying student loans.
I feel like I feel seen today. Okay, yes, I was one of them. Okay, I saw that student loan debt needed to be paid back within 6 months. I was gonna have to start paying it back, and I said, "Oh no, ma'am, no sir," and I enrolled back into school.
Yeah. So
listen, if I can go get my doctorate,
no, we're not gonna do that.
Just kidding.
So it provides a short-term solution, but it puts you in more debt as far as the big number at the end.
True.
The second thing is, not even before the pandemic happened. If you have a hardship or you have some things going on, you can contact the student loan company where you have, and you can fill out hardship paperwork.
Yeah.
You can get an interest reduction. You can consolidate your student loans. There are things that you can do if they're coming up due and say, hey, I don't have it, or this is going to majorly affect me. You can contact them and work out something, even with the people that we work with. If it's affecting them purchasing a house or getting pre-approved for a mortgage, we are seeing people being able to call and work some things out to provide a solution for people. Yeah.
So communication is key, y'all. Don't just, be at home saying, woe is me. Get on the phone. Talk to someone. Try to, make some things happen. I was going to say something else and now I forgot. What were you talking about? Oh, go ahead.
So I just went over it a little bit, but you can consolidate your student loans. And if it's a lower interest or a lower payment, if you're trying to buy a house, that can make a difference. Now, I wouldn't necessarily recommend in every scenario. Like, my favorite answer is it depends on your particular situation.
Seriously.
But getting a second mortgage or a line of credit or something, taking that debt and putting it in with something that goes up in value,
right?
That actually is a smart move to do that. So if you have a home, line of credit, or a rental property or something like that,
Mm-hmm.
that can be a way that you can take that student loan debt and put it into something that's interest bearing, where you can still be paying it off, but it's in something that's accruing in value. So that's the thing that you do.
Okay.
So the major thing is look at ways not to get in student loan debt, and then if you have them, look for ways that you can pay them down.
Mm-hmm.
So I know one of the things, real estate investing is a major tool that you can use. Having a side business, or opening your own business. There are solutions. It's not just all doom and gloom, and we're just hoping and praying that Biden cancels all of our student loans.
Come on, Biden.
So,
I remember. So there are loan forgiveness programs for people in specific industries. One in particular is for teachers. If you're in education, I know the U.S. Department of Education, I believe they have that information. So go there first, but also contact the student loan company that your loans sit under, and see if you qualify. I definitely know education has forgiveness programs, but also look, to see if your industry has a forgiveness program as well.
Absolutely. Yeah, that's great.
Yeah. Okay, so there are a few solutions for you guys. Those of you who have gone through college and gone to college, hey, congratulations. We have really expensive pieces of paper, and I hope that you are using those pieces of paper to do what you love. Just like I'm doing. I'm doing exactly what I love to do, and that's to help you guys find homes and build your real estate portfolio. But in the meantime, why don't you guys go ahead and subscribe, and make sure that you also hit that bell as well so that you're notified every time we upload new content. The Willis team is definitely here to help. All right, guys, we will see you next time. Bye.